Traders, we're going to take a look at some charts from earnings candidates that reported after the bell. The first up is Microsoft, and what you'll notice in the after hours is certainly a large red-bodied bar to the downside here. It's interesting because they did hit and even beat the earnings expectation, but they missed on the forward projections, primarily in the cloud-based segment of the business model here. So we are getting a little bit of a negative reaction. However, regardless of that, look at the daily time frame chart. We've got this really clear area of balance and a very clear and well-defined level around 241.30. Notice that on the downdraft from the quote-unquote miss of the forecast going forward, we basically went right to that level and we started to bounce off of it. Now, it's not a guarantee that this level will hold into tomorrow's session, but it is just reaffirming that it's a very important level nonetheless, right? It's not an accident that the market went here, found buyers, and is now turning around in the post-market. So going forward into the remainder of the week, what I would want to see happen is a hold, a very clear hold of 241.30 on Microsoft's daily time frame chart, because what would that suggest, right? Technically, you could look at it a couple of ways. Number one would be an inverted head and shoulders, and this is just a retest of the neckline at 241.30, or you could be even more simple than that and say, okay, here's a bull flag. We broke the flag. We broke this prior range high, which was clearly resistance from here. Break and retest. If we hold this, we should be moving in the upward direction based on a higher low being put in on the daily time frame chart. So Microsoft actually strikes me as being fine. Really not too much damage has been done as long as we're above 241.30. Now, again, there's a lot of time between now and 9:30 when the bell actually rings, so we could easily get further price acceptance in the downward direction, or we could open up at here as if nothing had happened. We don't know yet. So overall, the main levels that I would want you to focus on for Microsoft into the remainder of this week would be a hold of 241.30, keeps us bullish. You know, this is bullish consolidation here. And obviously continuation up and over 250.25, the top of the 3-day highs here, gets us through this thin structure and up and over the daily 50 SMA, which also checks out as being a bullish breakout. So I don't really see anything bearish about this chart here, even though we've got a pretty significant down move in the post-market based on the earnings announcement. Again, that's subject to change if by 9:30 we're slated to be opening underneath 241.30. If that's the case and we're opening on a massive gap down under 241.30, then I would say that there's the possibility of now the pattern turning into something that looks like this. You want to be on the sharp lookout for any possible lower highs if we open underneath 241.30 to reverse, or possibly, depending on how you look at it, right, from this perspective, certainly just continue the daily downtrend, right? You've got highs, lower highs, lower highs. This is finally an equal high, but if this gaps down underneath the 241.30 and we open in here, there's certainly the possibility that even on a rally, we could produce a lower high again and preserve the daily downtrend. So just to sum it up, neutral to bullish in here, breakouts over 250.26, anything under 241.30, start to get back in the bearish camp. Let's take a look at Google now. We're going to use GOOGL for Google, simply because the liquidity here in the options chain is much better than just Goog with no L. So here we are. It's already marked up for us as well. What you'll notice here is obviously a much bigger deal to the downside. So Google had this as sort of a balance area, and you'll notice that we looked above on today's session, rejected the 50 SMA here in the post market, but clearly have made a significant move, giving back a lot of the gains of this 3-day rally, right? We've got 1, 2, and 3. Almost all of that has been given back on the miss here from earnings. So with that being said, you'll notice that the structure on the daily chart is not nearly as bullish as what we just saw in Microsoft. So Google is actually looking like more of a laggard, much more of a short opportunity with a buyer's shut-off type pattern. This candle just negated the activity, as we pointed out, of 3 significant up trading days, especially the one today that took us up and over what you could start to have considered a weekly double bottom. So as long as we're underneath 103, you've got to be at best neutral. I would say, given that we're already underneath some of these consolidation points in here as well, right? This could have been looked at as a flag. We had this gap down that kind of complicates things, but as long as we're underneath, I would say the primary level to focus on would be $100.50. As long as we're under that, notice the intraday pivot, right? That's why it's so important. As long as we're under that, bears are much more firmly in control. We're nowhere near that neckline from the possible weekly double bottom around 103. So this chart does strike me as being much more bearish than the Microsoft chart that we just looked at. So going forward into tomorrow's session, a couple of outcomes that I would watch for. Number one is that this is a sizable gap down. So it might be difficult to trade right off the open, but if we do start to see some upward continuation, Again, $100.50 would be a primary focus for me. Not only was it a little rejection point from there, but again, look at that intraday reversal right off the $100.50 mark. So any rally first, watch for rejections off of that level, inverted hammers, double tops, whatever, short underneath the lows, retarget your pre-market low, whatever that happens to be by the time the open rolls around, and also your gap down open print from right around in here. That's much closer to 97.50. So that's a bearish opportunity if we rally first. If we just stay down here on the lows, it'll be much more difficult to pull off a short trade in Google because our risk reward won't be as closely aligned. What are you going to do? Retarget this with a stop over, 99.25? It just doesn't make as much sense. So I'd really prefer to see a rally first tomorrow in Google, find some resistance up here at our level, $100.50, short underneath that low, and then look for the rollover. So staying down low first makes things a little bit more complicated, a little bit more difficult to pull off the short trade, noting that you don't really have good risk reward from a target and stop loss perspective. Ultimately, for those of you who want this thing to go to zero, just be mindful that there's a big daily support around $96.25, and that could be a secondary target, right? So if we rally first, you pick up the short in here if it works out that way. Primary target here, secondary target is down at this daily level, 96.25. To negate all of the bearish sentiment that we've been unloading here on Google, you would have to see some sort of open above $100.50 and a sharp rally, like instantly, right on the open that gets back above 103. If that were to happen, I'll give the buyers the benefit of the doubt, but as of right now, opening way down here and with this type of sentiment going on, I don't necessarily know that it's a high probability outcome as we move into tomorrow's open. So that's Google. Let's take a look at Enphase now. ENPH is the ticker there. If I could spell PH, there we are. Enphase, what's going on with solar? Certainly getting a little bit of the opposite move, so a nice move on earnings here to the upside. Daily chart would suggest that we are holding outside of this balance area. A lot of volatility. Notice that this upper wick certainly didn't hold, and again, there's a lot of time between now and 9:30. Maybe we open up here. Look, as I'm speaking, it's moving higher, right? So maybe we open up there, maybe we open up down here. I'm going to give you a couple of possibilities and some thoughts based on the daily structure. So as long as we're outside of this daily range that I've just drawn in here, as long as we're above $200.50, $253, $254, as long as we're above that, bulls are in control, right? Technically, we could, just like Microsoft, roll over here, see a move into this zone, and then pick back up off of it for a break, retest, and go, right? So as long as we're above 250, 254, we're all good, and technically the structure on the daily time frame chart is reversing to the upside inside of Enphase. If we open up towards this upper wick, we'll be opening above 272.34. Why is that important? Well, certainly, you'll notice we've got a daily head and shoulders over here. If we open up above that, then guess what? Now there's no longer as high of a probability of a break, retest, and rollover from this perspective, right? It goes both ways. If you're looking for a really micro trend change, it's probably something that looks like this for higher. If you're looking for macro trend continuation, well, I suppose it would be trend change on the higher time frame, right? Head and shoulders is a reversal pattern, break, retest of the neckline, and then lower. So opening above that 272.34, again, you can see how that's critical to negating that break and retest type pattern. So if we open above 272.34, you want to see it hold up. You want to see that gap remain unfilled and prices accept above that level to negate the possible retest for the rollover lower. So 272.34 coming from the daily head and shoulders, or if we open lower first, right around this 250, 254 level, you want to see that hold for the micro bullish move to the upside. If you want to be bearish in this chart, you want to see an open that's just underneath the level, right? So something that might open right around in here. Maybe it pops above, but remember the open is underneath. If we move through the open after a failure to hold above that level, that's where I would start to look for a rollover to the downside, noting that that's a clear indication that buyers are failing to recapture the neckline. Again, it would require opening just underneath, a fake rally first, and then a rollover through the opening print. I could see a reasonable short on the daily trend being down and looking for that break, retest, and rollover here from the larger time frame perspective. So it's a battle of the time frames in Enphase, but so far those are the pivots and those are the scenarios I would watch out for into tomorrow's open. Next up, we're going to take a look at V for Visa, credit card processing. What's going on over here? Daily double bottom. Yes, move in the pre-market looking up. Decent move on earnings here. So what would I watch going forward? This chart is obviously not marked up, so let's go ahead and do it. There we go. I would just primarily focus on, yeah, we'll throw this on there as well. I would focus on these main levels. I was going to say 3, but it's actually 4, right? So as long as we're above the neckline, ultimately, of the weekly double bottom, bulls are in control in the higher time frames. That's going to be at 188.50. If we're above 188.50, all good. Look for trend continuation in the upward direction. If we open up above some of these pivots here and here, namely, that's where I would look for a gap and possibly go on tomorrow's session, right? A gap and go. If we can clear this, now anybody who's short under here is feeling the pain. Anybody who is short on the breakdown of this support from right around in here is feeling the pain. So those shorts get squeezed, and now we're moving on a gap and go to the upside, okay? So target might want to be somewhere up in here. 206.50 over time. I don't know that that happens on a single day's worth of trade. Who knows? Certainly seems reasonable, especially when you consider what happened here. That's, of course, the CPI gap down day. But regardless, that's kind of the structure. Everything's bullish, I would say, as long as we're above 188.50 in the grand scheme of things, because that's the weekly double bottom neckline. If we open above both of these pivots here, I would say it possibly squeezes out some shorts with a target up here around 206.50 as well. If we open kind of neutral in here, I would be exactly that, just neutral. As of right now, it doesn't look like that will be a possibility based on this move higher after the earnings announcement. But remember, a lot of time between now and 9:30, anything technically can happen. If we open underneath the level 193.65, again, that's your patience play. Watch for sideways. Technically, again, you could get the break, retest, and then rally higher. And then, of course, anything under 188.50, that's where you flip the script and say, okay, nothing but a daily lower high, then possibly look for the rotation back down towards the lows. But again, that seems like a very low probability scenario given what's taking place here with the earnings announcement and already the break of the double bottom from the weekly perspective. Actually not last but not least, we'll go Chipotle, so CMG. Then we'll also cover Spotify, and then we'll get out of here and let you have your evening for yourself. What's going on in this one? Certainly big move higher. This is pretty interesting, right? So CMG, it seems like everything that's non-tech related is doing well, and then Microsoft and Google are kind of the laggards. But here we go. Daily chart. Let's mark it up real quick. There we go, and that would be an upside target. That's almost right to where we've gone. Very, very cool stuff. So Chipotle, it tends to be spready with the options, so do be mindful of that if you're trading this with options. Tends to be spready. Liquidity is not always there in Chipotle, so again, something to be thoughtful of if you're trading the options here instead of the shares. But regardless, look at this nice gap up, taking out what was starting to become an inverted head and shoulders neckline around 1585. So clearance above that, slated to be opening much closer to this overhead gap. We've moved through a lot of the thin structure already. So this is not, I will repeat, this is not a scenario where I would necessarily look for a massive gap and go like what we just discussed in Visa, for example. Reason being is that we've already traveled through the thin structure. Right? So, we're running into all of this overhead supply. There's positions stacked up in here. So gapping up towards this level, people who were either long or short from up here may start to do something, which would mean we get chop around here instead of just rotating through it cleanly. Like if we were gapping up to here, it's a very mild gap up, something that was like 1600, then fine. Look left, you can move through this thin structure up to the target, and that would be with relative ease. The risk reward makes sense. There's your reward. Your risk is kind of back underneath the prior high of day. That makes sense, but obviously that's not the case that we're dealing with as of right now's anticipated open with the move having already taken place on the earnings announcement. So going forward in this one, I would say probably don't favor the long on the open. If it just rallies out of the gates and it's just a complete melter to the upside, then so be it. I got it wrong. I missed it, but I don't think the risk reward is favorable here. Instead, if you're someone who can tolerate the risk, then there's the possibility of a gap fill trade unfolding here to the downside, right? So what you'd want to watch for is an open here, a quick poke up and over that 1665 level, we'll call it, a rotation back down through the open, look to close the gap, right? And basically what you're looking to play off of there is anyone who was either long from in here is trying to get out for break even, they don't want to hold through the pain, or anyone with poor trade location in the pre-market who's not getting paid instantly on the open. If we start moving underneath some structure here, that's where those longs from the pre-market, again, we don't have that data yet because it's not 9:30 tomorrow morning, but you get the gist, depending on what the structure looks like in here, if we take some of that out, those longs are disappointed. They're not getting that secondary push they wanted from the earnings announcement. They close out underneath these lows, and then we come in to close the gap at 1585. Okay, so that's just one thought. If you're aggressive, if you like pushing it to the downside, if you can handle that type of risk, if you can execute and be disciplined, it's a possible trade to watch for here in CMG, which is just the gap fade, right? So a move that fails the overnight high, short through the opening print or underneath some overnight structure, target the gap close. That's what I would recommend here. Opening above, again, gets choppy. Opening inside, if we can open closer to the prior high of day, that to me is more interesting for a move higher. Right, so any opens that are around that 1600, 1590, that gets more interesting based on a quick gap fill. Anything that supports at the prior high of day, anything that supports at this prior breakout point, that's much more attractive for the long-sided trade back up towards that 1665. Okay, so it really depends on where we open in between this range here. Up here, favor shorts for the rotation lower. Down here, favor longs for the rotation back higher. That's CMG and the levels that I would watch in this one. Last but not least, we've got SPOT, S-P-O-T, for Spotify, and there we go, right? So right back to tech, and we're seeing a hit, right? So it's kind of it's the theme. Notice that the daily downtrend is severe and aggressive. Let's take a look at the daily chart, though, and mark this thing up just a little bit. So this certainly on the daily perspective was starting to build out a inverted head and shoulders, and where are we in relationship to the neckline? We're actually underneath. So unlike Microsoft, which is holding, we'll check back in to see if anything interesting has happened there, but unlike Microsoft, this is actually a no-touch zone. Right? It would be a completely different story if we opened above 92 roughly. If we're above 92, then fine. The daily chart has the possibility for a higher low that builds out above the neckline. That looks beautiful from a structural perspective, but currently we're underneath that level. So I'd be much more bearish in Spotify, looking for either just sideways, no touch, or a breakdown of this low at 85.72 just brings you to the head of the pattern much closer to 80. It's technically 79.60, okay? So overall, Spotify, not nearly as enticing of a trade setup compared to what we just looked at in Microsoft, and I would even say that Enphase looked better as well. So what else could we say? What else are the levels? What else are some scenarios? So this is no touch. Above, look for, so if we open above 92, let's talk about that one, right? You can see that beautiful hold there on the intraday from Monday. If we open above 92, you're just looking for any reason, like any bottoming patterns here, to get long and probably just retarget the prior high of day. It's the 50 SMA on the daily time frame chart. It's also this prior breakdown level from right around in here. I wouldn't really push the luck too far to the upside if we open on a gap down. You might even just target the gap fill and call it a day at that, right? So you open down here, you get a gap fill, which is right to the prior low of day, and that's it. That's the trade. That's the long trade if we open above 92. But again, currently kind of in between the no-touch zone underneath 92 currently, which is not as convincing of a trade argument. So that's going to wrap it up for the earnings candidates. Hopefully you enjoyed today's breakdown. If you did, let me know down below in the comments section or by giving the video a thumbs up. Catch us in the pre-market live stream tomorrow morning on the main channel. That is linked down below in the description as well. And with that being said, I wish you all a green trading week.